Yo, 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 yo. What's up, everyone? What's up? How is everyone doing? Let me see. What's up, AK? What's up, NT? What color is your Bugatti? uh, what's up? Oh, the chat is weird. Let me fix that real quick before we start. Let me fix that. Wait. Let me fix it. Let me just, for this stream, do like that. All right, perfect. All right, perfect. Let's continue. So, what's up, Teddy? What's up? Damilola, beautiful name. What's up? How you doing? What's up, Phil? How are you? I'm doing great. Thank you for asking. Thank you. How are you doing, my friend? Let me see. What's up, Kuzvir? Beautiful names everywhere. It's insane. Can you please share your chart color? Let's do it. So, my chart color settings. First, the body. An up candle right here. Just take notes or scroll back a few moments. My up candle is this right there. I'll leave it in for a few seconds. Then the down candle is, the bodies of the candle is this one right there. Then the borders are both the same. This is the border right there. Then the wick is also both the same. This is my wick settings. Then the background is just normal white background. And then these are all the different settings. So crosshair, I've turned it off right there. That's it. Hope that helps. What's up, Just Dollar? How you doing? Great to see you again, brother. I'm doing great. Thank you. What's up, everyone? Your videos really help me out. Beautiful. Love to hear that. What's up? Love to hear it. Last week was a fast one. Hope you caught a good bibs. Last week was insanely fast. It was crazy fast. The unfortunate thing from my side, I personally didn't catch anything. Of course, we saw the expansion coming, but I didn't catch anything. I didn't capitalize on the move. Bit of a shame. It is what it is. Anyone knows the underdog trader? I personally don't. Please give us your ST model. Oh, it is a mentorship thing, my friend. How are you doing, Matt? What's up? What's up, Damie? What's up? How is everyone doing? Great to see. Thanks for your help. No worries at all. No worries. What's up, fam? Good to see you. Hey, what's up, Dean? Great to see you again. What's up, ACK? I see you. Josh, back at it. Let's go. What's up, Rajesh? What's up? Hope I pronounce every name correctly. Sorry if I don't. Good to be here as always. What's up, J Alex? Great to see every familiar name. Love to see it. We watch Wimbledon final. Ooh, I personally don't watch tennis. Will you watch it? I personally don't. I personally don't watch any tennis. Journaling data. Please. Oh, let's do it. So first, of course, what we always start off with is the forecast. After we have done the forecast, I'll go over a few things, over questions, etc. Feel free to ask me anything you want. And I'll try to go over everything. Of course, I have some mentorship obligations, so I can't tell you everything. But I'll try to answer every single thing. Perfect, so let's get it started. So, what did we see last week? We expected, of course, a bearish dollar. Now, we have had a huge expansion. A huge expansion. Then right here, we reached that draw on liquidity. And once I saw that, I zoomed out. So I zoomed out and I was like, all right, what can we now reach for? The first logical target that we can reach for is if we are taking liquidity, we are likely rebalancing something. So right here, I was like, all right, we're likely rebalancing something. What is the thing we can rebalance? This fair value gap. So that is a clear draw on liquidity. Now, we haven't reached that draw on liquidity, that weekly fair value gap just yet. But what can we expect? Well, if we do want to continue lower into that weekly fair value gap, then right there we can come into that daily fair value gap on Monday or whichever day, come into that weekly fair value gap and potentially see a rejection right there. But again, I'm not trying to call a bottom right here. Be careful, we are still bearish. There's no reason to now say, all right, we need to take longs. If certain things change in the market, then we can potentially look for higher prices. But right here, be careful that you're not trying to call a bottom. So first, we need to come into that fair value gap, and then we can potentially see higher prices. But we have to see how we react right there. So this is already a clear draw on liquidity, and from there, I would like to see what we are doing. News-wise, it is a great week. I will also touch on news a bit more in the A to Z guide. This week, what we can expect in the A to Z guide is fair value gaps. I wanted to go over the recent tweet that I tweeted out where I said, you don't need a market structure shift if you use fair value gaps. That's exactly what I want to go over. And as well, how fair value gaps tell a story, how they tell sort of a narrative. And that is very important, I feel like. So that's exactly the topic of next week. So let's move on. The bonds are still the bonds. Let's just skip it. ES. All right. ES has been moving higher right here. Let me remove some things. ES has been moving higher perfectly. Very nice. It did exactly what we expected it to do. We had a sweep of this low right there, and then we continued higher right there. That is exactly what we expected. We got a beautiful delivery right here. ES was very, very, very clean this week. Liked it a lot. So what can we expect in the coming week? Well, I think we have a pretty clear drawn liquidity as well right here. But again, it's very dependent on what the dollar wants to do, of course. Then on the monthly, that is already a drawn liquidity. We are in this volume imbalance, but again, I do like fair value gaps more than I like volume imbalances. Here on the left, there's nothing really to look for targets currently because obviously this is a futures contract for 2023. So right here, what can we expand higher from? Well, we have a few fair value gaps sitting right here, and we have this order block right there. So if we do retrace, then I would like to see us continue higher off of there. I would not like to see a deep retracement. So if we get something like this, then obviously I would expect lower prices most likely. So that is something to be aware of. DAX. DAX looks like it might want to head higher as well. New all-time highs again. And potentially taking out this head and shoulder pattern, right? It's just a fake pattern right there. And we could head higher from this order block already. Not order block, sorry. This fair value gap already right there. We are also creating a small fair value gap right there, which we could head higher from. Something along the lines of that. So that could be nice. Could be very nice. On a weekly, do we have something to work with? No, it's just one big ugly consolidation. But if the weekly wants to continue higher here, where would it likely continue higher off of? We had this breaker block right here with what? This fair value gap. So then it will likely expand higher from here already. So that is pretty interesting as well. NASDAQ. All right. NASDAQ as well. Same story as on ES. What we saw, we swept this low right there, and then we continued higher. That's outlined in the previous forecast. So if we are continuing higher right here, what can we continue higher off of? First off, the thing I would like to acknowledge is that here on the weekly, we have expanded. So the past week, we had a huge expansion, right? In this week, this next week, it's uncertain if we will expand or if we will consolidate. And if we consolidate, what will we likely see? Something like this. And then the next week, we have what? We have a weekly fair value gap sitting right there with a weekly order block. So then we could expect something like this, right? So that is something to be aware of. Same as in this week. You don't know if this week will expand. This week was the expansion. Then this week, you're not certain. You're not 100% certain. Could be a consolidation right here. And then the next week, we have that move into that fair value gap, and then we expand higher again. Could be the same here, so be careful of that. Same for ES, etc. Just be careful of that. If we do continue higher, of course, we have this bigger mitigation block right here. Does this overlap with the fair value gap? No, it doesn't. We have this bigger mitigation block right there. Then inside, we have a nested order block as well with fair value gaps right there. Could be very nice to head higher from there, because as we talked about as well, what did we speak about in the previous A to Z guide episode? 3 discount rates right there. And I always prefer overlapping discount rate, overlapping PD rate. So that could be very nice. YM, all right. YM came into that fair value gap right there. Pretty weird price action right here. We did sweep this liquidity. Next drawn liquidity for me would be this right there. We have something on the weekly to work with. Huge consolidation. Look at this. It's just up, down, up, down, up. That's crazy. That is crazy. So right here, we have this fair value gap that we're now, by the looks of it, are expanding higher right there. This is a situation where I will go into the 4 hour. We could reach for this fair value gap right there. and then continue higher, but would not surprise me if we leave these equal highs right there and then first come back into something a little bit of a deeper discount, sweep that low or maybe into that fair value gap, and then continue higher until the draw on liquidity. AU, all right, AU as well. Finally broke out of this, oh, I already marked it. Finally broke out of this seek any short condition right here, this small consolidation right here. So what can we see? We can potentially see this new draw on liquidity right there, these highs. How can we trade into those highs? That's the only thing I'm asking myself right here. How can we trade into those highs? Well, we have this fair value gap right there, and we have a bit of a lower fair value gap right there. So that is exactly what I would potentially look at. But again, keeping in mind that weekly right there. The only thing that's always a bit of a 50-50 situation. And what I mean by that is, for example, if you have this candle, you have 1, 2, 3. That of course creates your fair value gap. But once you have the expansion of that fair value gap, the next candle is a bit iffy, as in you don't really know what it's going to do. The next candle might expand again and might come into that weekly fair value gap, but this candle, it's a bit iffy. But right here, we still have that clear draw on liquidity. This is a case where I touched on, and this is what I will touch on next week more in depth, where fair value gaps tell you a story. What I mean by that is usually I go for overlapping PD arrays with fair value gap, etc. What we talked about in the A to Z guide episode. And here, in this case, I wouldn't necessarily go for an overlapping PD array. The reason being that if this now is so close to that draw on liquidity, if this now is a deeper retracement, something along the lines of that, I would not like it anymore. If this is so close to the draw on liquidity, and that brings me back all the way to the silver bullet. The silver bullet is a thing, because the silver bullet is that last move before we take the terminus, before we take draw on liquidity. And usually you don't see a lot of manipulation there. You see a fast move into the draw on liquidity. So that is based on the fair value gaps. You would just see a sting into the recent fair value gap and then a move higher. That is where I don't necessarily need an overlapping PD array. So that is also something we will touch on later in the AC guide episodes as well, the silver bullet, etc. Don't worry. So I would prefer this one. Of course, combining it with what? Combine it with the day where we will see volatility. If you subscribe to the newsletter, you will notice exactly what I'm looking at. EU. All right, perfect. By the way, the newsletter, it's on ario.io and at the hand of news. So using news to our advantage, we can certainly know or have an indication on which day will expand. So most likely what you'll see is for next week. Let me actually grab the news calendar, economic calendar right here. We have USD news on Monday already and Australian dollar news on Monday already. So Australian dollar and US dollar are pretty volatile on Monday already. So Monday could already come into that and then already expand higher. That's exactly how I would look at that. All right, perfect. EU is just expanding higher right now. So again, I would do the same thing as on the dollar, where I look to the left for something to target. Some potential to target. Now there's not a clear target right here. That's what I don't like. And I don't like that, of course, we are in the expansion phase. For me to get involved, I would want to see a retracement phase. I would want to get involved into a retracement phase. This is a potential draw on liquidity. Would also want to see how the dollar reacts, of course, at this fair value gap right there. And then based off of that, I would see potentially something on EU as well. So this is quite interesting. We reached this first draw on liquidity that high. Will we continue higher? We have a small fair value gap there as well, which we can reach into. If we disrespect this fair value gap right there, then afterwards, we will likely take those highs and reach for that liquidity as well. So those are a few targets that we can use. And the only thing I would ask myself here is, again, I would ask myself, where can we likely continue higher off of? Well, if we continue higher, we have a fair value gap there, but we are already above this recent high. And based on the market structure, based on a lot of things, right? Is it logical to expect some kind of retracement into maybe something deeper discount? Yeah, for sure, that could happen. So just being aware of that. Again, I'm not trying to chase price and I'm not trying to call top. So It's 50-50. It's not ideal conditions. Ideally, you want to get involved in this expansion, of course. And then here you want to chill. You want to protect your profits. GU. All right, perfect. GU. So same thing. I see this swing high right there. And on a monthly, we had this fair value gap that we can reach into. Perfect. So that's exactly what I'm looking at currently. Same thing. If we can reach that next week, then there I want to be careful with trying to long again. If we reach that before, what I mean by that is right here on the daily, you have daily fair value gaps. So if we sting into this daily fair value gap first, then I would look for longs. But if we reach into that monthly fair value gap first, then when we come down, I wouldn't look for longs here anymore. I would more so wait and see what I want to do. And just being patient right there. That's very important to understand. All right. So this is the drawn liquidity for me. USD Canadian dollar. All right. It got to the lows right there, like we expected as well. Based off of that weekly fair value gap right there. It got to these lows, but it's sweeping the lows. It is not continuing lower. And this is perfect because this is what we can touch on next week in the fair value gap topic, where we discuss how fair value gaps form a narrative. And let me give you a quick insight here. Whenever we have something like this and we immediately retrace back into a fair value gap right there, then the chances, the odds of us continuing lower here are slim. Of course, it might happen, but they are very slim. And that is where fair value gaps tell a story. Because if we had a sting into that fair value gap and then we continued lower right there, it could happen. But here we are retracing very deep into fair value gaps. That is where I now start to doubt if we will continue lower. Of course, there's no reason for me here to say we are going higher. There's no reason just yet, but I'm aware of that. It's pretty 50-50 right now. I want a clear price action, a clear objective, and then I have something to work with. So if we can get something like this, could be nice. But again, a lot of is based on the dollar here. If we reach into that weekly fair value gap, I'm not sure why my trading view is loading so badly, but that weekly fair value gap right there, if we can sting into that, then we can also, of course, expect more logical higher price on USD Canadian dollar. Something I'm aware of. All right. Right here with USD JPY, you can see we had a beautiful, thank God it's Friday right there. Coming into, what was it? A monthly order block with a monthly fair value gap right there. From here, again, it is seeing what it wants to do. What does the dollar want to do? And you can see I'm being careful. And the past few weeks, when we had before this huge expansion, we were like, all right, we had a pretty clear drawn liquidity. This is exactly where ideally you want to get involved. This move down. And you can see the high probability days only last 1 week. And all this shit in between lasted way longer than just this big move down. So that is exactly where you have to be patient for the exact moves that you know you can see coming, in a sense, right? So USD/JPY right here, it's expecting we are, or it's waiting. It's waiting between this monthly order block with the monthly fair value gap and this daily fair value gap right there. We have both bullish and bearish arguments. There's nothing to work with here. Silver. All right. Silver does look pretty nice as well. We are sweeping that high right there and are coming into this order block. But if we do want to continue higher, then this would be a nice drawn liquidity right there. Based on dollar also continuing lower. Where can we head lower from? I would now like to see this fair value gap. This fair value gap, we can sting into it pretty deep. But the thing is, right here, I would want to see this high as well. This mitigation block or break block right there. Sorry, break block, yeah. This break block, I would now want to see it hold as support. So something like that, and then continue higher right there. That is exactly what I would want to see. That's something I'm demanding off of price. This as well, pretty clear drawn liquidity for me right now. This liquidity right there, what is above the liquidity? There is this fair value gap right there. So where can we continue higher off of? We have a clear fair value gap right there. We can continue higher off of something like this and then continue higher, and this being your drawn liquidity. I do quite like that. I do quite like that. Bitcoin, still in this big consolidation right there. If all my annotations, etc. load, we still have this weekly fair value gap sitting right there. Yeah, there it is. Perfect. So if we can sting into that, then I would target the monthly CB. If we sting into this first, then I would target the weekly fair value gap right there potentially, seeing how we reject right there. So there's something as well to be very aware of and be careful with. All right. Oh, let's see. What's up? What's up, Tori? How you doing? What's up, Ryan? What's up, Christian? Are is a b-ball? You know it. Come on. That volume balance looks juicy. Yeah, true. On EU, you mean? It's a crazy volume balance right there. Crazy one. Hello, sir. I follow your word. We'd love to hear it. Love to see it. Can you make the fair value gap more visible, please? Oh, sorry. It's the box, right? I'll try to use lines instead, maybe. Maybe that helps. Can you please talk about how news impact weekly/daily profile? Yeah, for sure. So how the news and why the news is so important for your weekly and daily profile. If we look at kill zones, and this was the email I sent out to the newsletter. Again, if you want to subscribe to that, then go to ario.io. It's a link in the description as well. And if we look at news and volatility in general, what moves the market? We have kill zones, and we know kill zones is a volatility driver. I would argue kill zones are very important for if you want to look for scalps. So if you want to use the 1 minute, etc., then kill zones are very important. If you want to catch the daily range, I would argue that news is more important than the kill zones itself. And that's the reason being you have sort of a hierarchy, right? Kill zones bring in the volatility, but to know if a day actually will be volatile, that is where news comes in. So if you know on a certain day where the volatility comes in is, for example, on a Tuesday, you have a lot of volatility coming into that day, then you know, all right, that day will be volatile. So that day will likely produce a significant move in the market. So that is exactly when you get a Tuesday low or high of the week. So if we already have news on Monday, then Monday can already expand. But what you'll see most of the time is that the biggest news or a lot of news is usually on Tuesday and Wednesday. That is also the reason why Tuesday and Wednesday is mostly seen as a high and low of the week opportunity. So that is exactly how that works. I hope that makes sense. So when you go back in time and you look at the certain news drivers, the cleanest moves always happen during a news period or during some sort of news driver. Again, it's very specific to which news drivers, not CPI, FOMC, and NFP. You don't want to trade those. But if we look at the major moves right here on the dollar, for example, this move right here, this move coming into that monthly busy right there, into that one, and then had a move higher, that rejection higher, that happened during news. This move here coming into that monthly volume imbalance right there, that also happened during news. The major moves happened during news, and you could call it a smoke screen or whatever, but the majority of the moves, they happen during news. So what is already destined to happen? News will likely speed it up. Again, being careful, FOMC, NFP, and CPI, if you're executing during that period in time on the news event itself, then the only thing you need to take into account that you are likely just gambling and it is not trading because there's no risk management involved. You're essentially risking your whole account or your whole funded account, so your daily drawdown limit, etc. You're likely risking that fully to gain maybe 3% or whatever. So that is something to be aware of, right? Then you need a 100% win rate to master that. And you will always lose sooner or later. You will always take one loss right there. So that is very important. Hope that makes sense, by the way. Let's see. Do you trade retracement or you wait? Depends. I wanted to say, I have a few trading plans inside the mentorship. If you apply a trading plan that is mainly focused on one instrument or one pair only, so you only look at ES, for example, then I would trade the retracement. Otherwise, I would wait. Let's see. NQ all-time high. Yeah, it's crazy. All-time highs. That is crazy. I don't like that though when we have all-time highs. The reason being is because you don't have a clear drawn liquidity anymore, right? So that's crazy. How was your first experience with Michael J. Huddleston? With ICT, just, yeah. And it was at first, my first experience with ICT, and that was my own laziness. That was more so that I was like, I don't want to watch this guy with all these hours of content, etc. It was my own laziness speaking, but then again, I always heard the story, and of course, everyone tells you this. I always heard the story that other people told me, right? This guy just talks for hours, doesn't really give out the important messages, etc. But it is what it is. I find it, you get used to it if you watch it a lot of times, so I don't find it that annoying, to be honest. Is gold going to retrace back to the CPI expansion? Let me see, what was the CPI expansion exactly again? This expansion, I believe. Yeah, if it does expand all the way back to this right here, I personally wouldn't like that. If it retraces all the way back, because we have a pretty clear drawn liquidity right there, so right? So based on the fair value gaps, etc., a small sting into that I would like, but a big retracement into that, I wouldn't like that. I would prefer, so to answer your question, no, I would not prefer that personally. I would not prefer that when we just have something like that. That is what I would prefer. Is newsletter from you already sending out messages? Yeah, I sent out a message. They're still ongoing, so I don't set the messages all at once, but there's still the newsletter. Let me see, actually. Let me check for you, my friend. Because there's still a patch outgoing. So throughout this week, people received certain emails as well. Let me see if that patch is still ongoing. Let me see. Yeah, that ends at... It is still going today as well. Then I believe it ends the 19th of July. So there's still 3 days. So you're likely in one of those lists. So the email's coming your way. Don't worry. Or with broker are you using on dollar? My broker showing weekly fair value gap. My broker's capital.com. All right, I use TVC. That one right there. You can also use your futures. And ICUS is the official, I believe. This is, did it reach it on there? It's always a bit iffy because once I notice this, it's of course, mostly I just stick to one thing, and if it works, it works. And there's always a reason to justify something. It's a bit difficult, but yeah, I use TVC. It's important for price to displace away from the fair value gap in order to trade. And does it apply to liquidity? Price displays away from liquidity and breaks intermediate term high / intermediate term low for market structure shift, session high / lows, previous day high, previous day low. So it is important for price to displace away from the fair value gap. Yeah, for sure. So every time we see a fair value gap, it's important that we see displacement. That's of course the whole premise behind trading in general. We want to see displacement in order for us to get involved, essentially, and to know how price. Well, I don't want to say that, but how you can view at some certain price levels where we have a market structure shift instead of a sweep. Usually a sweep, for example, this is a sweep where we stay above it for a very short period of time. If we closed above it, then based on the whole liquidity theory, etc., then of course we will likely go higher. So that is something to take into account, right? That is something to be aware of. That is our whole idea and theory, that there's someone in the market that is bigger than us, that is placing orders right there, that is working against us. So if they are working against us, they are placing orders, they shouldn't stay above that high very long. That is also how you can view that, right? Because look at the difference here and look at the difference here. We close below it and we have only a sweep into that fair value gap, and then we continue lower, right? Please help me know if the price will switch from bullish to bearish. That is a great question, and we will go over it in the A to Z guide as well. And that is a big question on fair value gaps. So fair value gaps are very important in that case. Thursday and Friday, dollar was really melting, but just kept consolidating. I just don't understand that. I was expecting gold rally to run up. Oh, gold was just consolidating. Yeah, that is what it is. I also expected it to continue higher. The only thing I can think of right here. If you notice the story I was telling about the weekly fair value gaps, that applies the same on the dollar, right? So whenever a price leaves behind an inefficiency like this, that is where it gets tricky, because price usually wants to trade back into that inefficiency before it wants to move higher. So we have this 1, 2, 3. This is the expansion. This right here is 50-50. This right here is pretty clear, because this candle will likely trade into that fair value gap, and from there we can expand again. So that's reading the daily candles. That's what we call it inside the mentorship. It's candle signs. Let's see, where was I? What's up, man? Gonna provide you signal. Open euro, Australian dollar, hourly chart. Clear. Thank you, my friend. Let me see. If I make some profit off of it, you'll have to send me your PayPal, all right? Oh yeah, this weekly fair value gap. Oh, we had a big rejection right there. I see. Yeah, beautiful equal highs right there. Ooh, my friend. Thank you. I'll add it to my list. Thank you. It looks very good. Nice spot. The previous year low. Will dollar rate the previous year low? Oof. I have no idea, my friend. Let me see. Previous year low. Where even is it? Previous year. Damn. That's crazy. So the thing I'm seeing here is, will we consolidate the last 5 months? This is the year, the yearly chart. That's crazy. I've never used this in my life. But will we rate this one? I don't believe so. At least not this year. I don't believe we will rate it this year for this low. That's, again, don't take my word for it, because the monthly and the weekly, etc., they will tell you a lot, but I don't think we are heading towards that previous year low just now. Maybe next year. Maybe when we all have children in 2050. Wave counts. I don't trade Elliott waves. Wave counts is Elliott wave, right? It's what is it? I looked into it when I got into trading a couple of years ago. I looked into Elliott wave, but it was a very short period of time. It's like A, B, C, 1, 2, 3, 4, 5. I believe if you truly study ICT, you're better off. As in, it's even easier. Please help me know. Yeah, all right. Don't trust volume imbalance. Notice it. Yeah. You're taking the word from my mouth. Metathea. I'm sorry if I mispronounced it, but that's exactly. I don't really trust volume imbalance. I don't really like them. I always prefer fair value gaps over volume imbalances. I don't really like volume imbalances. And as well, if you don't need to use every PD array, right? That's also the reason why. Because if you're using volume imbalance as well, then you have fair value gaps, then you have new week opening gap, then you have this gap, you have that gap, there's always a reason to justify a trade ID. And the thing is, in the beginning, when you just start out with trading, that is when you want to have always a reason to justify trade ID, because you want to be able to catch every single move. But when you truly start to understand, all right, I need to pick my poison in a sense, and I need to stick to a few things, then you will filter out the things you truly like, etc. And that is where you filter out some PD arrays, where you don't need to know everything. Plus, volume bands have to be overlapping. Yeah, nice. Nice. Everyone has a mentorship. All right. Do you have a mentorship? I don't believe you have a mentorship. I believe a lot of people in my chat don't have a mentorship. Good evening, everyone from Kambodsha. Oh, nice. Yo, is anyone funded here by any chance? I believe a lot of people here are funded, my friend. Would you please analysis? Yeah, I just did gold. Gold US dollar. I'm expecting higher prices, my friend. First of all, sorry if you tagged you on my analysis post on Twitter on the name Wild Trader. I have a quick question related to your video on dealer rates. Yeah, I'll look. I actually, ACK, I forgot, because obviously I couldn't reach out to you in a simple way, but I looked at the thing, at the, what's it called, the DMs on Twitter, but I couldn't find you, my friend. Because obviously, yeah, it's a different name, under the name Wild Trader. All right. Are you gonna add journaling and backtesting in your A to Z guide? That's a great suggestion. Let me add it as well. And that was the question, right? On how to journal and how to backtest as well. I believe you asked that question at the beginning of the live stream. Let me go over that. So let me add the suggestion as well. Journal backtesting. Yeah. So what I would always advise, if you are starting out and you have some kind of idea what you want to use in your trading plan, and of course how you get to this idea is also forward testing. Forward testing and backtesting, there's a huge difference. I would always suggest and advise prioritize forward testing over backtesting. If you're going to do backtesting, I would always advise do hindsight backtesting. If you're truly trying to do backtesting where you use the replay and you truly take the trades, of course, be my guest. Don't let me discourage you from, if you do like that, don't let me discourage you from not backtesting or anything. But I always found that backtesting led me to build unhealthy habits. And what I mean by that is backtesting, you can skip so fast. For example, all this price action on 1 year time. That's a week done, that's another week done, that's another week done, that's another week done. So what I found is that when I backtested a lot, it was, I just kept skipping until I got to a trade opportunity. And when I got to the actual chart, I was so impatient now that when I got to the chart and I was behind my desk, etc., then I was like, all right, if the setup doesn't present this second, then I will just leave. And that is, of course, not real trading. So that is why the backtesting, I always advise just don't do it personally. But again, that's where personal preference comes in as well. And journaling, journaling, I'll dive deeper into the HC guide as well. Don't worry, I got you. Agree with studying the price and high time frame. What is your minimum time frame on large time unit to determine your dealing range in order to trade into the low time frame? 4 hours, 1 hour. Depends on the trading plan. Again, if you focus on one instrument, one pair, I would advise 1 hour. If you focus on multiple and you apply filtering process that we use, then I would advise 4 hour minimum to go into the low time frame. So for me personally, I use 4 hour minimum to go into the low time frame. Bonjour, what's up, Fabian? How you doing, brother? Great to see you. Great to see you. Can we chop down the Dow? We can, potentially. Potentially we can, but not too sure currently. Not too sure currently. That's also how fair value gaps formed this narrative right there, because we've swept it and then we do continue higher. If price didn't want to continue higher and didn't want to aim for this high potentially, what you would likely see here is sweep that high, then disrespect this fair value gap and continue lower immediately. And currently we still have a big rejection right there. So do you trade redelivered rebalance? I personally don't. No. I think that comes back to the again, the same thing I just mentioned on volume balance as well, where if you trade, of course, nothing against people that trade it or anything, but if you always have every PDRA, you always have a reason to trade everything, then there's no boundary anymore. You can just do everything in a sense, right? That's not how I would personally want it. Could you touch on inversion fair value gap? I see them working wonders. Nothing against you, Matt. That's it's funny because we just talked about redelivered rebalance, then we talked about volume imbalance as well, then new week opening gaps, and now we have inversion fair value gaps. That's exactly what I mean with, if there's so many PD arrays, I tell you, for example, it's just, I'll go over it, don't worry. But I'll just give you an analogy. If I tell you the market isn't random and I use 1,000 PD arrays on my chart, then how is there even accuracy right there? Because if I just do this, if I just add a few random lines right there, then you will always see some kind of rejection. Here we have support right there. Then here we are breaking that support. Here, perfect support right there. Here we have perfect resistance right there. Perfect resistance again. Support now becoming resistance because we break it. Support now perfect. At first we had resistance, now it's support right there. Can you see what I'm trying to say? It's when you have inversion fair value gaps, when you have redeliver rebalance, when you have volume imbalances, when you have all these kind of things, then there's always a reason. The market is super random if you have all these things. That's what I'm trying to tell you. But if you do want to use them, inversion fair value gaps, I would advise to use them mainly on the high time frame, so daily and weekly. And what you would then do is we go onto the dollar. Let me find a few examples, of course. then right here, what you would do is we have this fair value gap, for example. Once we close inside that fair value gap or close below it, then right here, you would now expect this support, because first it was support, you would expect higher prices off of it, is now resistance. So you would expect it to be resistance where we respect with the bodies, like we saw right there. Right there. If that makes sense. But again, it comes back to the same story, like, do you need this or do you just need that fair value gap? It's all these kind of interesting questions, right? Same as this fair value gap. Then on the lower time frame, what you will see as well, mainly on the 1 hour, you will see nice rejection right there, for example, right there. But again, what's overlapping with it, there's also a daily order block right there. So do you need this fair value gap to tell you what to do? If you want to use it, then that's perfectly fine. There's nothing wrong with it. Nothing wrong with it. Just be careful that you don't always have a reason to justify every trade ID. For example, like we talked about the random lines again. Hope that makes sense. But I hope that makes sense as well on the inversion fair value gaps. Let me know. Do let me know. Yearly chart for bias. Yeah. 12 months. Crazy. Crazy. My analysis for Australian dollar JPY. I want to go long. Can you help me in that? And USD JPY is having 4-hour BPR. Please check that first. So USD JPY right here. This is 50-50 for me because we have a monthly discount and a daily premium. What will be stronger? The monthly discount right here will be stronger than a daily premium. So the daily needs to be in context of the monthly. If the monthly wants to go higher here, then it will go higher right here. So that is something to be aware of, that this daily doesn't have a lot of power in a sense, right? If you share your shares of a company, the monthly will have stronger voting rights than the daily. So that is something to be aware of first off. So that is why I'm 50-50. Then here we also have a BPR right there, like you said, right? This bullish BPR. So that only further, for me, confirms the idea that we might want to continue higher right there based off of that, and that we will disrespect this daily fair value gap. So that could actually be very nice. As well, keeping in mind, we don't have to come here. And the reason being, this could very well be a breakaway gap. Now, what do I mean with a breakaway gap? It's nothing fancy. It's just this breaker is the first support line in a sense, right? So this is your first line of defense, that breaker right there. So this doesn't have to come into that. Can also just do something like this and then continue higher. And then Australian dollar JPY, yeah. Australian dollar JPY. Let's see. What was I looking at right here? Overall, we had a pretty clear bullish bias right here. Coming into that mitigation block, we didn't reach it, but we do have a huge rejection based off of that fair value gap right there. That is pretty interesting. Do we have something on the monthly to work with? Currently not. On the daily to work with. So again, this is the same story, right? This is 50-50, but I would lean more towards the bullish bias. And the reason being for that, again, weekly fair value gap right here. Overall, we have been very bullish. This daily order block right there with the daily fair value gap sitting right there and right there. Yes, it might hold, but what is stronger is the weekly. So the daily needs to be in context of the weekly time frame right there. So that is something to take into account, that how do we reject right here, if we even reject, and how do we reject right here? Because by the looks of this, we are currently rejecting in that. But this is a pretty clear drawn liquidity in my opinion, but do we reject right here, or do we just follow lower and then sweep the previous week low into that weekly mitigation block right there and then continue higher? Because that could also happen, something like that, with the overlapping PD rate right there. So yeah, it's I do agree with your long bias for sure. I do agree with that. It's my pleasure, my friend. Thank you, brother. Thank you. Do you use a COD hatching program? I did use it back in the day, but I personally don't use it anymore. And the reason for that is just I couldn't be arsed. couldn't be arsed to look at it, to be honest with you. I just don't like it. It just wasn't my cup of tea. Laura, what about macros? Do you think it's worth to pass through them? Thanks. No worries, Mario. Thank you. Great to see you again, by the way. Great to see you again. So the macros, it's a funny concept. It's if a setup shows up at a certain time of day, and it happens every time on that particular day, then do I need to pay attention to the certain timing, or do I just need to pay attention on how I can focus on, according to price action, how I can catch that move? So what I mean by that is, if I have this weekly mitigation block, weekly breaker block, and we have this fair value gap right there, this happens exactly on the 16th of July. What is the most important part here? That it happens on the 16th of July, or that it happens that a setup is right there presented. The most important part to me is that a setup presented right there. So the part with the macros can be filtered out because there is no setup before that time. So if there's no setup before that time and after that time, and the setup happens during that time, then the time right there is not relevant, in my opinion. And the reason I say that is because most of the time, the setup will form either way. The setup will be there whether you pay attention to that time or not. And that is a huge part of a simplifying process, because a lot of people think it's the time factor right there. And it might very well be that the time is very relevant there. But usually what happens, there is no setup before that time and there's no setup after that time. There's just particularly a setup in that time zone. So the only thing you need is that price action part right there. That is where the setup presents. You just need to act on that setup right there. That is very important in my opinion. More so important on the macros for me. With delivery months, how can you predict OHLC quarterly? I personally don't do that, but you could do that. What you could do is, for example, the 3 months right here, and just say, all right, the first month is maybe a down month, then we have an expansion, and the last month could be your distribution. So what we would see here on Australian dollar JPY is this first month was a down move, then now we are in for that expansion move, and then right there at the last month, right there we have our distribution, where we now have the opposite wick. That's how you could use it. It's a fractal process, so it's very fun. It's very fun actually to look at that. Aren't the Dutch underwater in 2050? I think we might be. I think we might be fucked. Who knows? Hello from Indonesia. Hey, love to see it, brother. Welcome, welcome. Hope you're having a great day, brother. Yeah, please your view on GBP, New Zealand dollar, and Euro CHF. Let's do it, bro. Let's do it. For sure. Let's do it. GBP, New Zealand dollar. All right. What are we doing on the weekly? So I'm building my way down from weekly to now daily. Weekly, again, I talked about this on the previous weekly forecast, I believe as well, where we saw this huge sweep right there. We are above that high. We saw this huge sweep, and again we are sweeping. The first thing that comes to my mind is this drawn liquidity, and that drawn liquidity is what? That's a previous week low and a swing low right there. Then the next one is this right there. You have this drawn liquidity and that drawn liquidity you can trade into. How can we deliver into those drawn liquidities? Is right here we have, what are we working with here? We have this daily fair value gap that we could sting into right there. All right, I do want to go into the 4 hour to see if there's something else. The only thing that I'm thinking right here, what's going through my mind, is that this daily fair value gap is pretty high, right? It needs to like do some distance before it can reach into that and then continue lower. So right here, my mind and why I went into the 4 hours to see if there's something on the 4 hour right there, then I would expect it to potentially respect that and have a little sweep and then aggressively continue low right there. But if we do come into the daily fair value gap right there, I do quite like that. I do like that with a huge 4 hour fair value gap as well. Looks quite nice. So if the retracement happens right there, then we can get involved right there, targeting that low and that low. And the other one was Euro CHF. Euro CHF. All right. All right. So what's happening here? What are we seeing? We are currently sweeping below that low right there. We are potentially making a weekly fair value gap that will be determined next week. That is interesting to potentially take a look at. We have reached this drawn liquidity though. So this is where it gets interesting, because price, if it wants to continue lower, this is quite interesting because we reached this. All right. So the first thing going through my mind is if price now wants to continue lower, we have this mitigation block right there, right? overlapping with a fair value gap. So if we continue lower, we can sting into this fair value gap max. But I would not want to see a huge retracement right there. When we have this huge retracement, my first eyes, where my eyes are going, are these highs right there. That is the liquidity we are going to be targeting if we disrespect this fair value gap and that fair value gap. So we have a huge retracement, something like this, then I would use that as my target. That is the first thing that's going through my mind. So this is quite interesting. I would wait and see how we reject. If we reject lower here, if we come into this fair value gap, if we slowly climb higher, where we slowly continuous climb higher, I would likely see this as my next potential target. Right there. Okay. What are we seeing? What are we seeing? Hey bro, love your teaching, man. Hey, appreciate it a lot, Dale. Appreciate that a lot, brother. What is your opinion on using mitigations as support and resistance? Yeah, it's perfect. Perfect. It's yeah, it all comes down. I don't want to call it your typical support and resistance, but you could see it as just your typical support and resistance. Yeah, nothing wrong with it, brother. You do you, bro. No worries at all. Have you looked into the Hong Kong Index 50 gap? A very interesting addition to ICT's a new week opening gap, a new day opening gap concept. I have not actually. I have not. Quite interesting. Because it could be very a pair or instrument in this case specific, right? Very interesting. Ario, I have a question. Any possibilities for USDJY to reach equilibrium day for value gap? Thank you. Yeah, for sure. For sure. Yeah, for sure. The 50% right here, right? Yeah, for sure. It's something we could reach. 100%, brother. 100%. The replay bottom is poison. Yeah, that's also how I view it, to be honest. Also how I view it. Yeah. Alright, sir, great man. You are, God bless you, sir. Just want to thank you. If you can just give a quick recap about ICT Silver Bullet. The ICT Silver Bullet, let me save it for you. I'm sorry about this, but let me save it for you for a particular video where we dive into the Silver Bullet very specifically. Let me save that for you. But please appreciate your kind words, brother. Appreciate that a lot, man. Makes my day. Thank you for that. I also see a lot of times when price takes out the intermediate term highs, intermediate term lows, it still doesn't shift and violate order flow. What do you sort of mean with that? I have some kind of idea, but again, it's difficult. If if you have some kind of chart example, I would ask, but it's of course not doable. It doesn't shift and violate order flow. I'm not sure, brother. What's up, Cheetah? How you doing? Hi from Turkey, you are great. I have a problem with liquidity wrap or structure break. Will you explain this at YouTube? Yeah, let's do it. And that's actually it's perfect time question, Parma. Perfect time question, because that's exactly a part of what we're going to go over in this week's topic in the ATC guide. So that's perfect. It's absolutely perfect. I like that. Let's see. Where was I? Hello, sir. Can you please help in explaining the balanced price range concept? Yeah, for sure, brother. So the balanced price range, I didn't make a particular video on it, did I? Yeah, I did. In the ATC guide, very short. But balanced price range concept is where we have one fair value gap perfectly overlapping with another fair value gap. So right here, for example, we have 3 candle formation. This is a fair value gap, right? Then right here, we also have a fair value gap. In between this, so the part that is overlapping is this part, right? So this is your BPR. That is a balanced price range, what I would call a BPR. Hope that makes sense. It's just overlapping fair value gap constantly. So this, you also have fair value gap here, also here, but there's a wick in between. This is not a BPR anymore for me. So if I can find another one for you, my friend, right here. Here we have a bearish fair value gap, a bullish fair value gap. This part, that's your BPR right there. You use CBDR Asian range? Yeah, I do, but not particularly paying attention to it. So what I mean with that, it sounds very vague when I say it. It sounds so stupid, right? Like, ooh, I use it, but I don't pay attention. What I mean by that is that whatever Asia does, I don't really care what it does, because I anticipate or react to it in London. So whether it sweeps it or respects the Asian range, I already can see it coming in a sense. So yes, I use it, but if Asia expands, then I will already see, all right, London will only be a retracement of what Asia likely created. If Asia is consolidation, then I already have a clue, all right, London might sweep what Asia created and then continue higher. That makes sense. Why do you hate bro, guys? Just kidding. Don't troll me. Come on. Come on, brother. I was wondering before I found IC. I've studied about Ralph Smith and the strat. Ooh, that's interesting. I've also heard about that, I believe. Yeah, have you heard of him? If you use a study, I know. Yeah, Alex Options, exactly. Alex Option and T Trades as well. I think use sort of a combination of those ideas. I haven't heard about the strategy itself, but I've heard about the name and Alex Options. I was in the Discord for a few moments just to look around, wandering around, but I'm not actually sure what it implies. It's based on data, I believe. Correct me if I'm wrong. Hey, how are you doing? I'm doing great, brother. Thank you for asking, Mohammed. Thank you. How are you doing? I'm late again. Bro. No, I swear we have I swear the same guy, the same guy always goes into the chat here and tells everyone I'm late again. It's too funny. Better late than never, brother. Better late than never. No worries. That's too funny. What's up, Ennis? How you doing? Hello from St. Martin, bro. Oh, that's crazy. St. Martin. That is crazy. The other side of the world. How is life out there, brother? You're a master. I need more hours in the day to see all your material. Thanks. No worries. No worries. Appreciate that a lot, man. Appreciate that a lot. You need more hours in a day. Well, if only we could imagine if we just have more hours in a day. Wouldn't that be sick? Well, we can force it, but it comes at a cost. We have to sacrifice our health for it, which isn't that great, I would argue. May you provide good win rate strategy for funded account? Yeah, that's. I sort of go over it in the trading plan using dealing ratio as well in the entry pattern. The only thing then you have to sort of combine yourself is find the confidence, because of course in the YouTube video it is different than the mentorship, whereas in the mentorship I have very specific trading plans, but in the YouTube, of course, there's 1,000 people watching that. Then there's a lot of people I have to take into account, where I have to give you a trading plan for your personality. That's very difficult. So what I would always advise, what works the best, is take a few concepts that I'm teaching right there, and what I would then do is use the concept you like, then find out how you can make it sort of mechanical, which we go over in the A2 guide as well. And then you add confluences to the trading plan, and then you have your trading plan. And then once you dive into it, of course, not financial advice. I wouldn't advise to go for funding or anything, not financial advice. And then you can find out what's missing as well. So in 1 day for value gap, there's 4 hour value gap, so, and it's bigger than 1 day for value. So which one I need to mark? I would advise the higher one. So the 1 day for value gap, the one in the daily for value gap, that's the one I would use personally. I do not see you using premium and discount loss. That's something not important to you. It is somewhat important to me, but the PD raise itself. So if you think about PD raise on a certain level, I don't want to dive too deep into it, but I make everything philosophical. But PD raise itself is already a short-term premium or discount. So what I mean by that is when we know where price will likely react using overlapping PD raise, then you don't necessarily need premium and discount itself, because that overlapping PD rate part, that is already likely going to be close to your discount or premium itself. And the PD raise, the overlapping PD raise, is already where you have two factors of either premium or discount itself, if that makes sense. So that's the reason why I personally don't use it. It is important, but meh. Yeah, meh. Not that important to me, I would argue. Forex.com, USD CHF. All right, let's see. So what are we working with again? My mouse is tripping a little bit. Let me fix that real quick. Perfect. So we have had a huge expansion. Damn. COVID lows. Or this is not COVID. I'm talking. Ignore that. That's not COVID lows. This reminds me of a GU COVID lows, where we have just huge wicks. This is not COVID. I don't remember COVID being in 2015. Anyway, we took out some major liquidity, reached the drawn liquidities. Right there. We continue lower. Huge expansion. I don't like this. And the reason I don't like this is because we have reached clear drawn liquidity. This was COVID lows right here, but not this one. We only have wicks to work with. Personally, I would ignore this, ignore the wicks right there. See if we have something on a monthly as well. We have a fair value gap sitting right there, monthly fair value gap. Did we sting into that actually? Did we sting into that? It would have been very clean. We did sting into that monthly fair value gap. All right. Again, not trying to call bottom right here, but also not trying to chase price. So what I mean by that is I'm not trying to long instantly. I'm not trying to look for longs instantly, but I'm also not trying to get involved in this fair value gap because this is very low in the leg. And here actually what you could do, and this is where the previous question on premium and discount comes in. The reason I don't use premium and discount is because if I do want to get involved, I will likely either wait for it to shift some structure to look for bullish price until we reach an overlapping PD ray right there with a fair value gap. So this low could be my drawn liquidity right there, but I would first need some kind of bullish price action, and there's no bullish arguments right here currently. Oh, that makes sense. Do you believe in climate change? Ooh, it's a huge topic. Do I believe in climate change? I don't really pay attention. Do I believe in it? Well, from my point of view, and again, don't get offended or anything, but I just believe it's a natural process of the world. And what I mean by that, again, I'm not a scientist or anything. I could be very wrong. It might speed up the process with what we're doing here, but I think it's not that deep as we think it is. I think it's just, yeah. And do you believe in it? I personally, the reasons they are stating, I personally don't really believe in, to be honest with you. But again, that I'm not a scientist. I'm just a simple guy here. So don't take my word for it, please. Trade from Philippines. Love to see it. Hello from Somalia. Hey, love to see it. Love to see it. Love to see it. There's a lot of different people. We have India. Hello from India. South Africa. That's crazy. South Africa is, oh, I really want to visit South Africa. That would be lovely. Would be lovely. Are you bullish or bearish on dollar this week? I am in between. I wanted to combine the names bullish and bearish, and then I saw it both ends on ish, so that won't work. But yeah, I am a bit in between because I expect this to be reached, that weekly fair value gap. So you could say I'm bearish, but from there I want to be on the sidelines right here and wait for more price action to work with potentially. See what we do there. Can you show your background color? Yeah, for sure. So the background color, it's actually white. I get a lot of questions on my background color, and it's white. I haven't changed anything. Truly, it's solid right here, and this is vertical and horizontal. And this is just white. It's the FFF. It's all the way at the top left. It's just white. I'm not sure what it is. Why it looks that way? I'm not sure, brother. Let me see. Where was I? If you had to restart your trading journey, would there have been anything you would have done differently? Yeah, 100%. A lot of things differently. First off, I would stick to one mentor. So I would likely stick to either ICT himself or someone that teaches ICT. So am I sort of justifying my own reasons right there to teach? But that's something I would do. Then the next thing I would do is learn from him until you are sort of ready, but don't be reliant on him or her. So what I mean by that is when you are doing your own markups, your own forecast, your own analysis, your own whatever, it is going to be very difficult at the first moment in time where you will feel like I'm unsure. I'm uncertain of what we do want to do. And that's normal, of course. But at that time, don't go back to your mentor all the time and just try to think for yourself. As tough as it is tough, of course, but being more reliant on yourself, being more confident in my own abilities as well, that is very important. And then studying on your own. When I do not know a concept fully and I do not understand it fully, rather than someone explaining it to me that is already explained it, that is of course important because the basic guidelines is important. So whenever you watch a certain video on a basic guideline, all right, this is how it works, then there's no secrets to it anymore. And what I mean by that, there's no secrets to it anymore, is a lot of the times people are searching for videos with one sentence in it that will fix the whole world and will give you all the money in the world, where it's just not true. It's very simple. You have this basic concept and you apply it over time and you study it through your own eyes, where you go into hindsight and you do deep work sessions, you backtest it, etc. And then it will make sense to you. But there's not a secret sentence to it where you think, all right, it all makes sense now. It's just hard work. That's all it is. So hope that makes sense somewhat, Tori. But that's how I would do it. It's becoming more independent, believing in your own abilities and through your own studies. That is very important for me. Breakout, yeah, there was the color. All right, perfect. Once you see it, you can't unsee it. Yeah, it's simple, right? Once you see it, you can't unsee it. Like, come on, you don't understand it? Come on. You can't unsee it. I see it. How can you not see it? Come on. Do you know how that's so fake? It's so stupid. It's once you see it, you can't unsee it. Oh my. Can you share your take on breakaway gaps and when gaps should be left open? Yeah, for sure. So whenever gaps get left open, what you usually see, there is another support or resistance area right there. So there's a PD ray that is withholding price from reaching higher into a gap or into anything, right? So what I mean by that, if I can find an example right here, that would be nice. Let me see. Yeah, reason being here, for example, why is this a breakaway gap? Well, first off, we have this mitigation block right there already sitting there. And then we have this fair value gap. So there's two PD rays right there withholding price, resisting price from coming into this fair value gap. So it's counting the PD rays in a sense, right? It's counting the PD rays, how many PD rays are withholding price there from coming into the gap. And once we move away again, then of course we can say in hindsight, it's a breakaway gap, if that makes sense. And that is when you will likely see when they are left open. Ram, love you too, brother. Love you too. I'm late too. Where's the 100% success rate material? The clickbait, the shitty clickbait. Sorry about that. It's the 100% success rate. I don't know where it is. It's the enigma. It's we have to ask the ICT AI voice. Maybe he is the 100% success rate. Your video for daily and weekly range video is fantastic. Thank you, Suel. Appreciate that a lot. Love you too, brother. Love you too. Love that. Appreciate it a lot. Your concept is mainly for trending market. What about for ranging market? Do you have an approach also for ranging market just to avoid the trade? It's a great suggestion. Great point you point out there. And I also plan on making, because the whole thing I'm teaching here in the A-to-Z guide as well is, of course, it's mainly based on trending markets. And because markets mostly trend, right? And it's for bigger capital and for beginners in general, it's easier to trade trending markets. And it's easy to get filled, etc. It's just better, in my opinion. But ranging market, there's a lot of people that do so particularly well in ranging markets. So I'm also making a video on a trending market and a ranging market, and how we can then capitalize on a ranging market as well. So for sure. In the A-to-Z guide, of course. Yeah. How can we predict in advance if market will be ranging or trending? That's also a great suggestion. And it's also a video I will be making. And the only thing I can say on that currently is the weekly forecast we have done the weeks before this is when you followed along with this AU chart. We swept buy side liquidity here. We swept sell side liquidity. A clear consolidation right here, right? We swept both sides. Then we hesitated, or not hesitated. Then we rejected back into 50% of this range. Once this happened, I was hesitant to take shorts here because this could show seek and destroy signs, which exactly happened here. And once you study this, that also happened on the dollar right here. We took major liquidity. We reached back into 50% of that most recent range. And then we are just stuck there for a while. That's what happens most of the time. Hi, Ariel. How do you know in advance if higher time frame array will not hold like daily or weekly POI? That's a great question. And in advance, I can give you probabilities. I can tell you this has an 80% chance of holding, but I cannot tell you this will hold in a sense, right? That is not, if anyone tells you that he knows for a certain 100% that this POI will hold, then he's absolutely bullshitting, because no one can know that. Not even the greatest traders, you know, they don't know. They work with probabilities. We have a great acknowledgement of this might hold. There's a higher chance that it will hold than it will not hold. But there's probabilities in play right there. And that is done through, again, that's done through the foundation, where you have structure, you have your order flow, you have the PD raise, you have all these things, and then you can get to great acknowledgement of this high time frame PD rate might hold. Hey man, can you check Euro GBP and Euro Australian dollar? Let's do it, Tanner. Let's do it. Let's do it. Euro GBP first. All right, let's see. Euro GBP. This was a nice delivery last week on Euro GBP. I don't know if you followed it, but it was a nice delivery. I liked it. Quite liked it. Then we came into a weekly fair value gap there as well. We came into the daily fair value gap refined right there, sweeping that liquidity. Target, of course, being that low. We now reached that target. So the first thing I'm noticing right here is we have a clear fair value gap right there. But if we reach into this fair value gap, and this is exactly what I mean with fair value gap style story right here, we are sweeping this and we immediately retrace back into the range. So what I mean by that is this fair value gap is not continuing to push price lower. No, it's sweeping that low and we immediately retrace. So this could very well be a target right there. How can we deliver into this target and into that target? We swap this low. We are now coming off of this BPR into that breaker as well. We have this fair value gap. Not clear discount arrays to work with just yet. I would likely wait for Monday to show something more, something more to work with. But if we can continue higher here, potentially here, into this bigger order block right there, could be very nice. I like that. I do like that. Euro Australian dollar, let's take a look. This was the 1 hour market maker buy model that the top showed me, right? The G, the one and only. The one and only. So we are coming into that weekly fair value gap again. Again, a huge rejection. This swing high is a clear target for me right there. How can we deliver into that target? Again, same story. Did you notice on Euro GBP, we had an immediate retracement after sweeping those lows into something there? That is not what I would like to see. If we are sweeping or we are continuing lower, then something like that, right? Right there, immediately sweeping. How can we continue higher right here? We can continue higher off of, we have a fair value gap there. Then we have a breaker right there. I do like these. Thank you for pointing me out to Euro Australian dollar and Euro GBP. I do quite like these. So we could see something like that and then continue higher until first, this is your drawn liquidity. That's the first one. And the second one, of course, if we are taking this, then we are highly likely. Again, I'm not 100% certain. We're working with probabilities, but there's a 90% chance that if we're taking that high, then we're also taking that high. So that's exactly what I'm looking at. It's a great suggestion. Australian dollar, Canadian dollar with news. Hey, Teddy, I like it. I like it. I like it. Australian dollar, Canadian dollar. Let me take a look as well. With Canadian dollar or with Australian dollar news. Sorry. Ooh, we are expanding higher. All right. Interesting. Interesting. What is happening here? What is happening? We swept those lows right there. We are right here. All right. We have a daily fair value gap to work with, but this wick is very high. What I mean by that is a long wick. For price to come into this right now and then continue higher could happen. Of course, we have a whole week of price action, but we also on the 4 hour are potentially creating something. So there's two things to keep in mind here. We have this order block on the 4 hour and a fair value gap right there that we could expand higher off of. If we want to get involved, strict risk management. Why? Because we have a daily fair value gap sitting right there. This could get swept to then continue higher. That's again probabilities. That is again being aware of your surroundings. Like, because the 4 hour has to be in the context of that daily. So in order to be for it to be in context, this could happen. So be aware of that. GBP JPY. Let's do it. GBP JPY. GBP JPY. Let's see. Where are we at? Where are we? What is even the target? We are right there, coming into that order block. All right, we are rejecting off of this weekly fair value gap right there. So let's use that right there. If we want to continue lower, I would expect likely a move lower from there. So that's my invalidation level. Then on the daily, we are already continuing higher. Again, same story, sweeping those lows. It's a huge rejection right there. Nothing clear to work on the daily, to work with on the daily. We do have this high that we could reach for. Then on the 4 hour, we could have a very nice delivery here on the 4 hour. I do quite like this. We have this order block. So if we're continuing off that order block with that fair value gap as well, something like that potentially tomorrow or whenever, when we have news supporting the ID, something like that. Clear consolidation. I like this. I like this. I also like this. You all are suggesting some great pairs to trade. Thank you for the signals. Come Egypt, brother. I would love to. I would love to come to Egypt, brother. I would love to. We love your work, bro. Thank you. Appreciate that a lot. Means a lot to me. Means a lot to me. Thank you. Thank you. Thank you. What's your view on Andrew Tate? Oh, I quite like Andrew Tate, and it's not, don't get me wrong, I don't like him because all of the things he says, but I like him because he pushes me to be a better version of myself, and he pushes me truly to a certain extent. If I notice, for example, if someone is doing a podcast, I can listen to hours and hours of Andrew Tate talking. And just because of the way he speaks, with his energy, his way of communicating, he can communicate so clearly that he can exactly say how he thinks about it, etc. That's such a beautiful art. That's such a beautiful skill to learn. So the way he talks, etc. It sounds like I'm sounds like I'm glazing crazy, but I can admire that. That's a huge thing I'm trying to learn as well, communicating at my best. So that is exactly what I'm trying to learn. And I don't necessarily think he says crazy things. He just says things in maybe a little bit of a controversial way, but in the world we live in now, I think, like, especially the fucking crazy shit what's going on in every world, every country, especially in the Western society, of course. I don't think he says a lot of crazy stuff. I agree with almost everything he says personally. So yeah. You just visit the Bahamas. You just visit the Bahamas. Brother, I'm not the Bahamas. Oh no, wait, I thought of the Maldives. Maldives is cool. Jeez, Bahamas. You just visit Bahamas. Where was it? Where was that message? I lost it. Where was it? Huh? You just visit. I'm sure you'll love it there. Oh yeah. Oh, you're from the Bahamas story. I didn't even know that. That's crazy. I'm sure. Bro, I would love to visit one day. It would be awesome. Just the whole world. I would love to visit every country, to be honest with you. May I ask about a free Discord discussing real-time ID based on IC with free, please? Oh, Greens from Egypt. I currently don't have a free Discord, but feel free, if you reach out to certain people here in the community, feel free to make a free Discord. Feel free for sure. Really appreciate the lives. No worries, man. Love doing them. No worries. Love seeing you here as well. Appreciate you being here for sure. SMT also contribute to the breakaway gap for sure. Great suggestion as well. Whenever a new week start, how you analyze the market shortly, explains sir. So if we look at it from a step-by-step process, I go over the economic calendar first. So economic calendar first. Then I go over the pairs that support trading the economic calendar. So what I mean by that is if we have USD news or Australian dollar news on Monday, I look at those pairs. Then I go over those pairs. I look at the weekly. Where's the weekly hovering? I go over the daily. Where's the daily hovering? If there is a need for it, I go into the 4 hour as well. That's it, summed up. And then for the concepts, etc., then you can also watch the AZ Guide videos. That helps. Liquidity must be always in the form of swing high and low. Doesn't necessarily have to be liquidity. Liquidity, when we refer to liquidity, well, when I refer to taking liquidity, I usually refer to taking swing highs and swing lows. But fair value gaps are also liquidity. And order blocks are also liquidity. So that is also something you can target. But liquidity, when I refer to actual liquidity, I always refer to swing highs and swing lows. Yeah. Nice to see you first comment, first time in the live stream. God bless you. Brother Thomas, appreciate. Whoa, sorry, I punched my mic. Brother Thomas, appreciate that a lot, man. Appreciate it a lot. And welcome. Welcome. Hope you enjoy your time here, brother. Great to see you here. Thank you for being here. Appreciate it a lot. Range less consolidation, seeking story comes into play at high time reversal POIs and high time equilibrium, or if there are huge needs even about to come, which great point you're making there, Mohammed. Absolutely true. Love that. Love that. And it's very true, yeah, for sure. Maybe please explain, show what you would do once you've reached your target. Once I reach my target, it's also a great suggestion. It's a great question. So once I reach my target, the first thing I do is I stay on the sidelines. That's the most important thing. I stay on the sidelines and I zoom out again. So what I mean by zooming out, if we look back at the videos on the intermediate term highs, intermediate term lows, on market structure, etc., then when you zoom out, so once you reach a draw on liquidity right there, and for example, these highs right there, that buy side liquidity, I zoom out because we take an intermediate term high, and usually an intermediate term high is my target or intermediate term low. Then the thing right there is we usually retrace back into something on the higher time frame. So into this weekly fair value gap, into that weekly breaker right there. So I don't get blindsided by looking for longs right here, whilst price might retrace back into something on the time frame above it. So first thing I do is I stay on silent and zoom out again. May you please explain? Oh yeah, I went over that. Sorry, my brain is already getting a bit fried. Sorry about it. Hey man, this was exactly the same as yours. Thank you for teaching. Appreciate it a lot. Great to hear, brother. Great to hear. Love that. Been following you for a while now. You've come a long way, brother. So appreciate it a lot, man. Thank you, thank you. We've certainly come a long way. We're only starting. It's only the beginning. We are certainly getting our path or making our path. For sure. Appreciate that. Appreciate that. Do you have trading hours, sir, or specific times in the market? I refer to kill zones mostly. So the kill zones of Forex and indices. That's what I refer to mostly. So London, mostly London, I would say. Mostly London. I trade mostly London because I like to be done in the morning and then just go about my day instead of just looking at the chart all day, etc. I like to wake up, be done, voila. If you're visiting Bahamas, then tour the entire Caribbean. Yeah, let's do it. Let's do it. The entire Caribbean. Damn, that's crazy. It's a beautiful place out there. I'm certain. I don't understand why you say order block or liquidity. Can you explain? Yeah, for sure. So order blocks, if we look at it from liquidity, what is liquidity? With liquidity, we just say there's certain orders, etc., getting into the market that are getting distributed or accumulated at certain points and areas in price. So at order blocks, what essentially happens is you have certain orders accumulating or distributing or are getting taken off at certain moments in price. So that is exactly why we use order blocks in the first place. So order blocks and fair value gaps are also some form of liquidity. Of course, it's a little bit different where you don't take out liquidity, as in you don't target a retail concept, etc. The whole main basic idea behind liquidity. But there's still orders getting distributed, getting accumulated right there in order blocks, in fair value gaps as well. So that is exactly why I refer to that as a liquidity as well. But if I'm talking about liquidity, mostly I'm talking about swing highs and swing lows. Yeah, for sure. Do you trade or invest in crypto? I personally don't. So the way I see it is right now I'm mostly investing in myself. So what I mean by that is the thing you will hear when you get into investing is invest into the S&P 500 and in about 40 years you will be a millionaire. And that's a great idea if you want to do that. But the thing I like the most is investing in myself. So learning more skills, learning a language, for example, paying someone to learn a language, because that is the most leverage you'll get. If I wasn't able to speak English, I wouldn't get all the following I have right now, for example. So invest in learning a skill, because that brings you the most ROI. Investing in yourself. That is my life motto in a sense. First, investing in myself. So me bringing in the most money, and then I invest in other stuff. So when I'm truly wealthy, etc., if I ever get there, of course, then I would invest in crypto or whatever. That's how I view it. Might not be your question. Your question was just, do you trade or invest in crypto? But simply said no. Do you think these concepts work with crypto market? For sure. Maybe not so the time aspect, but in general, it works with crypto 100%. Yeah, for sure. How much time do you need to trade up to a 911 convertible? Bro, it depends on the capital. If you have a lot of capital, then you might only need 1% of your account. But if you're starting from 1,000 US dollars, then you might need a lot of time. So a 911 convertible. That's crazy that you said that, actually. I like the 911. I love the 911. I love the Turbo S. Turbo S is my dream car. Can you make a video or explain about risk management for funded accounts? Yeah, for sure. The most important part, and that's actually what we're going to go over in the HQ guide as well. The most important part is understanding risk parameters. If you have a no time limit prop firm, and that's what I would always advise, no time limit prop firm, because that's the, even FTMO nowadays, FTMO is doing something, my Forex funds as well. It's beautiful. So then there's no reason to fill anymore. And what I say then is, what I mean by that is, if you apply risk management and risk parameters, so when you go back below your starting balance, you now risk 0.5%. When you then lose or you're in 4% drawdown, you drop back into the 0.25%. Everything above your starting balance is 1%. And once you do that and you apply that, you can't fail if you keep your psychology in check. So that is very important. It's risk parameters. Risk parameters all comes down to, and that's in harmony with your psychology, because a lot of people will encounter drawdown in their funded challenge and they will fail it because they will think, all right, my strategy doesn't work. With a 50% win rate, you still have an opportunity, or there's still some chance where you have a 50 trade period where you lose 6 trades in a row. Something you need to understand, right? Something you need to understand. So yeah, very important. One person, do you still play basketball? Can you talk about that? It's a great question. Thank you for that. I like the personal questions as well. We don't only talk about trading. I like that as well. So I have quit basketball for around 3 to 2 years. My whole life was dedicated towards basketball. And when that happens, is your identity becomes sort of the basketball or the sport you're playing. When people know about Ario, they thought, yeah, basketball. And when you quit that, that's very tough. Do I still play it? Sometimes it's funny because I actually played it yesterday, and I thought about getting into basketball again on a high level, and I would love to get back to Italy and potentially even play a season or coach, because I love it. I love it, but it's a sacrifice I have to make in order for me to get to a freedom level, right? And that is very important for me. So I currently don't play it. My brother has a academy, which I would love to coach as well and help with certain things. So in that sense, I would love to get back into it. I would love to, for sure. It's such a nostalgic. It's that feeling of the basketball. It's crazy with every sport, of course. If you've played it for a long time, the nostalgic feeling of the people you know, and etc. It's such a crazy feeling. How many trades per week is realistic for sustainable profitability over time? Trades per week, I would argue 3 trades a week on average. But for example, this week I only took 1 trade. And sometimes I take 4 trades, for example. But maximum 5 trades is what I would say. At maximum. Nothing more than that. 4 is already perfect. Over a long period of time, that's perfect, I think. Do you trade AMD? Yeah, I do for sure. For sure, but it is incorporated into my plan, so I don't pay attention to it. Again, what I mean by that, AMD, for example here, this thing into that premium array, that's the only thing relevant, but on a lower time frame, we will sting above that midnight open gap, or midnight open line, sorry, and then we will have an entry opportunity. The only thing relevant for me is that we are coming into that premium array right there. So I don't really pay attention to the midnight open because I don't think it's that relevant in a sense. Because the PD race will already tell you what it's doing. If it makes sense. But I do use it, yeah. Where are you from? I am from the Netherlands, my friend. From Amsterdam. Amazing understatement in combination with style. Love it. Love to hear it. You're doing great work, brother. Thank you for your time and God bless you and your family. You likewise, Mohammed. Likewise. Likewise, my brother. So on that note, let's end it. I think that's perfect. I wish everyone still a great do I see comps work on Indian markets like this? Yeah, for sure. 100%. Like Nifty, yeah, for sure, brother. All right, on that note, I want to end it. Thank you everyone for being here. Love y'all. Have a great weekend. Remember to be positive, think positive, control your mindset. Very important. And I'll see you at the next episode on the A to Z Guide as well. And yeah, that's about it. Again, newsletter if you want more advanced insights, ario.io in the link in the description. Thank you, everyone. Thank you for being here. Love y'all. And take care. Take some rest. Get ready for the coming week. All right, perfect. Thank you, everyone.